What's up YouTube, it's Louis here. I hope you're all well. Today is going to be a much potentially longer video. It's going to be one of the most important videos that I've made on the channel so far, so I'd appreciate it if you could go ahead and like the video. Of course, subscribe if you support the channel, and comment down below. We need more engagement and likes, so it gets the content out to more people. Share it if you can, I'd really appreciate it. Now, we're going to look at two charts today. We're going to look at this chart and then the BLX chart, where we can see the history a bit better. However, what I would say though is yesterday was a very good day with the daily candle close. Now, the day before we closed below this ascending support. That's very negative. You basically want to come down to this low, and if you do not hold this as support, you'd come back to this low. That's just the fact, basically. You're falling out of this ascending support, coming back down to the swing low over here. Lose this swing low, you go to the next swing low. Okay, so very simple. Lose this swing low, come into that one slash the 31K area. Now we know that this level over here, the 618, is the area that must hold if we want to have bullish continuation. So go ahead, come up here and basically have a push exhaustion phase to the 0618 like we have here. Put in higher lows ever since, and then obviously breaking the high eventually. Now, of course, this was negative because you're obviously, in this case with the body candle close, actually put in a lower low, and we're still not breaking above this this sloping downtrend basically, which we need to get above. This is a new line. We'll go into more detail about this line in the next chart, but you can basically see we're getting rejected here, and then with the daily candle close below, respecting the continuation moving average as resistance, we should now continue this downtrend, and that means lower lows. Now, yes, we closed inside, but today very quickly we started dipping down. We were below this line, so for me to stay bullish or to stay thinking that we could break out bullish, we need to close within this box. So if the candle closes as it is right now, this is a good sign. However, guys, let's be real, it's got 14.5 hours to stay still, and we know Bitcoin does not stay still for 14.5 hours. So we're going to get some volatility today. We know that we must close within this or break outside of this, and we could take some long trades basically if we can break this downtrending resistance. However, if we break below this now, we're ready for those bearish targets. We need to hold this green box to continue up. Could even roll out of it, but we must pump up afterwards, breaking above this red box. We know this red box, this red line, is so key, and that's why it's so negative to see this reaction from it. You can see we had support here, support here. Every time afterwards, you could not hold it as support or resistance. You broke through, 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 you broke through. So it's absolutely ridiculous. So many fake outs in this area. No back tests of support or resistance. Just you keep breaking through it every time you come to it. Apart from the two times in the past in September and January. So it was strong support. We were getting reactions from it. It was a bottom once, but now we're just going in and out, in and out, in and out. Can't decide what it wants to do. That's why it's so important to see what's going to happen over these next few weeks, and we'll go into more detail right now about why it's so important to keep our eyes peeled over these next few weeks. So I've drawn a lot on this chart basically. Now I've come to the decision that, or to come to the answer that this over here, the structure is very similar to this bear market structure over here. And what I'm thinking is happening right here, right now, in this small triangle that we just zoomed in on the daily time frame. This is the weekly time frame. Is we're just coiling up. We lost the 55, very negative. One thing I want to look at is look to the left first. Now we can see the first time we came into this support, we got a quick reaction, and then we went up for 1, 2, 3 weeks in a row before finding the next support. So I know that this over here is a valid area of support. What is also important about this bull run, which commenced over here in April 2020, is that you were holding the 20 EMA every single time. You never came down to the 55 EMA. I want to then bring you over to the previous cycle over here, where we commenced it in December 2015, and we never ever touched the 55 EMA. We never closed below the 20 EMA until right there where we came to the 55. Look where the 55 EMA first time it touched. It was right there on the previous support. The previous support where we came in, we found support and had a quick reaction where we went up for 1, 2, 3, 4, 5 weeks. So we went up 5 weeks, but look where once we lost the 20 EMA, we came to the 55, and that was at that previous support. So the same thing here. The first tap of the 55, I'm drawing the box from the 55 down to the bottom of the wick. Then I look left and I see this body is lower than that. So I draw that box to that body. And then we look to the right now and we see the same exact thing here where we found support and then we had this reaction. And then we lost the 20 EMA and we came down to the 55, and I've drawn my green box from the 55 to the wick. And so that is literally the same. And then you can see we had this, we were coiling up here and running into this apex. So what I believe is that the true top was April. And this is what I've been telling my students over the last few months. I think that this was a false high. The reason being is, yes, we went higher. We could not close higher than this. And that's why it's a fake high. So I believe that, and if we look at previous bear markets, if we look at the date here, 11th of December, and then you bottomed out the week of the 10th of December. We topped out exactly the 12th of April. I then went and put a line over here, vertical line, on that same week a year later. Then I picked up the bear market fractal. Now, I'm just going to remove this for a second. I want to show you this over here, this area over here is the same as this. The only difference, there's very slight differences. There's only one in my opinion, because what's very similar is the 55 and the 20 is almost crossing. The 55 and the 20 when we were right here was almost crossing. You're coiling up into the apex, you're coiling up into the apex, you're running out of space, you're running out of space. A move is going to be forced. The only difference here is that this coiling up is not happening inside the green box as it did here. It's happening a bit higher. But we can see diminishing pressure. So the reason why I've drawn this line here is because for me, it's like a descending triangle, just like this one here. However, the only difference this time is we've had this false high. You can see this line was being respected. Resistance, resistance, broke out of it, support, support, multiple touches of support here. Broke down, resistance, 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 and constant resistance. So I know, look at that guys, all the rejections here. So I know that this line is valid now. And if we just completely ignore this, you can see it's like coiling up in some sort of descending triangle. So only once you lose this low over here, 28k, only once we're closing below that wick, because we confirmed the bear market once we lost that wick. You can see we're holding above it. And then when you lost this wick over here on that candle, that was your bear market till the 200 weekly EMA. So the same thing should happen here. If I get that fractal again, and the fractal was from on that bottom just before, and then right there, and then I'll draw it up to there, because we didn't because this was COVID, right? So we don't know COVID's going to happen again. So I'm going to put that right there, and you can see I'm going to break out to the downside. This is obviously potential. We don't know that this is going to happen. We're just looking at the past, seeing if it's lining up, and we're noting a lot of things that were happening over here is now happening over here. So yeah, if we lose this support now, we get one last dump. If we lose this support, we get one last dump. However, the thing is, you add the green support. So we might not come down below it. We might just dump to the green support. And then we do this sort of structure, just like here. And then the target would be a bit different in the sense, you can see that it would be a bit different because it's happening at a different time. But if it's happening like this, where we actually come down to the green support, lose it, come down to the 200 weekly EMA, just like we did here, in, out, in, out, in, out, in, out, in, out, in, out, like between it, consolidating through it, eventually breaking back in, holding at support, breaking it back in, holding at support, reaching the top of this range. I've drawn this channel over here through this point, and then the first wick over here, because I know this was the first tap of the 55 EMA. This is the true support. This is the true level that if we close below that wick at, let's get that wick exactly, 30,260. If we close below 30,260, that for me is your confirmation of the bear market, where we get this final last capitulation event. We get that capitulation volume, and then we start heading higher. You can see this fractal is lining up exactly with every single support and resistance point. This is not manipulated whatsoever. I just picked it up from here, and then from here to there, and then I ignored this and I did the rest from here to there, and I've just put that there, and you can see it's lining up nicely with our 2414 target that we have for Bitcoin at 260k. So honestly, in 2020 I thought Bitcoin's going to go to 200k, but since looking at the previous market over here, measuring from the top to the bottom, we actually had the 2414 target at 19k. So it makes sense that we have a 2414 target again. It's just that we know that obviously this is taking much longer than usual. You can see that the fractal's low over here. I'm not saying it's going to go to that low. I'm just saying that if we lose this green box, we're going to have a capitulation event, and it's going to be something similar like this, and then we're going to get out of it quickly, and then we're probably going to top out here in November time, and then come back down at around 75k, come back down from May 2023 back down to here. It's going to be so annoying. Hopefully this doesn't happen, but once you come to this resistance, I'm not expecting it to be broken on the first attempt, and we know that this is the middle point. As long as we're above this middle point, like here, you should actually head to the top. So if we're breaking above it and we hold this, we should head to the top again, have a little pullback before breaking it, and then our next target is 120, 200k and 260k for Bitcoin. Keep your eyes on this fractal. I'm going to pause it right now, pause it and take a picture of this fractal. What's happening right now over here is mirroring this exactly. The only difference between this and this is this area over here, this false high that we had in November. If this is the true high, which I believe so because we couldn't close above it, then this was April the 12th. We should bottom out the same week, April 2022, around 11th, 12th. And that is going to line up exactly in time with the potential capitulation. Look at this, guys. I put this line because of this high. And then acting as confluence is the fractal, which is telling me we're going to coil up in this, break down. You can see we're going to break down to here, have a little pullback, break down, have a little pullback, and then go sideways here. So one final capitulation just in time for the potential bottom. Obviously, some people are going to say, no, Louis, November is going to be the bottom. This was the high. November should be the bottom, which is like over here. So I don't believe so. I think that this was the true high. If you go to the pi cycle top indicator, it was telling you guys that this was the top. There was also that curve. I don't remember the name of it. There was also that the curve. I think that's also the cycle top indicator, but different one. And then that was 65k, and then we came up into it again and we were getting rejected. Now of course it's not like as common, it doesn't look as there's no dead cat bounce here. Basically it should have stopped here and then we should have dumped, and that would have been the dead cat bounce, but we put in a higher high, but it's a false high. So the top was April, we should bottom out in April. The fractal showing that get back to the top of the range by November. I was not manipulating these fractals. I just put a line through this over here and then I'll wick over there, and then I just extended it and I dragged it up until there, and you can see the fractals lining up nicely with it, not tampering with anything. I just placed everything and you can see it's respecting everything so nicely. Double top, come back down, double bottom here, come back, retest, breakout, retest. It's literally perfect. So that's pretty much it, guys. Please like, please subscribe and comment. Take a picture of this. Keep this in mind. I'm going to be following this. See how long this fractal follows for. I'm not saying this is exactly how the bull market is going to be, but let's say we do get in and around here at the start of basically 2024, unfortunately. So a long, grueling process ahead. It's going to take another 2 years from today to get to the bull market top, in my opinion. We know these targets will be met. The only thing we don't know is the time period. However, we know for fact that we're getting a lengthening cycle, and this consolidation period has now lasted over 1 year and 2 months. So it's so important going forward to see how this is going to react. But yeah, we can take that the cycles are getting longer and longer, and so it would make sense if we do eventually get up to this price target, because we know it will be met, as previous bull runs always go to it. So we're expecting this to happen as well. It's just we're stuck in between the 1618 and the 1.272. Once we're out of this range, hopefully if we do break below, we get back in quickly, and this is a fake out just to retest that 200 EMA, get a reset. We know if we're holding the 200 EMA, it's basically saying we're still in an uptrend, break back up, find support and head to our final target. Thank you guys for watching. I'll catch you next one, and as always, peace.